Okay, so just another recap for the 18th of May and a bit of the 19th of May 2022. So on the 17th we had some hourly equal highs that were taken, and we could expect it to either raid a bit deeper or just raid a little bit and start to go bearish again, because our overall bias is still bearish. So I just want to zoom in on the 1 minute chart from yesterday, because there was one example of an RMR. So just to recap, I call RMR the raid or reach, the market shift, and the return to wherever we're happy to participate. So a gap, an order block, a fib, so like a sweet spot in the fib, the OTE entry as ICT teachers, or anything that you use that you're happy to participate. So I saw an RMR in this section over here. Let me just pause it for 1 second. Okay, I just got my screenshots ready. So just some context. For the day, it was quite bearish already to start off with during the London session and the first half of the New York session. And if it's, for example, on the 18th, it was quite bearish during those sessions. And usually the market, when news hits or when equity is open, the opposite side will get taken. So in this case, buy side was taken just to stop out anyone that was covering their shorts with a really tight stop loss. So if people were shorting and shorting, they might cover themselves with their stop. They might place their stop at a recent high, something like that. So with that in mind, when 9:30 ticked, we saw buy side liquidity being stabbed up here. Next thing I'm looking for is a shift. So we scroll through and we see a shift here. So a raid up here, the shift over here, which created a gap, and in this gap is our return area. So I had a screenshot here that I took. So we had the raid buy side liquidity, we had the shift which created a gap, and I'm looking for a retracement within this gap to become a shorter. And once we short, we'd be aiming for different areas of liquidity. So if I zoom to the left a bit, on the 16th lows, there's slightly equal lows here, and on the 13th there are equal lows here, and if we're being optimistic, the year's lows. Don't think it's the year's lows, might be, but yeah, down here there's equal lows as well, like the long-term equal lows down there. And what happened was, let's zoom in a bit, is we had one opportunity here, just a little wick in there if we're following this framework. So we only had 1 or 2 minutes to be a participant in this short scenario, short RMR scenario. If you had a different entry method, then you might have got in, but for me, I didn't manage to participate in this. So this is what I saw, and then this is afterwards. So with these little wicks here, I didn't see that as my entry. I was waiting for a slightly better price. In hindsight, this would have been an incredible entry, but we don't always get those. I just wanted to add, because I was only using a 1 minute gap to refine my entry, and I would have only had 1 or 2 minutes to enter, on the 3 minute chart, there's actually a much more wider entry that's available. So there's a bigger gap here, and you can enter in any of these candles. But unfortunately for me, my framework was only with the 1 minute candle, 1 minute gap, so I couldn't participate in this. And then afterwards, there were opportunities to participate, but I wasn't part of it. So for example, there's a gap that was printed, you have an opportunity to enter here, and other gaps that are printed give you other opportunities. So here you can get in, and this line just represents noon in New York, so which I believe is London lunchtime, and London lunchtime there's another likelihood of a retracement for another entry to participate in the true move. So if we just look at London's lunch when it ticks, we look for some sort of retracement, and a gap here was formed, a pretty small gap in here, and it gives you one more opportunity to participate. And then in hindsight, it kind of just dumps all the way down to the equal lows, which are here today. So today I'm looking at these large equal lows down here. This big blue box is a daily gap, so I've just labeled it out here, this daily gap. So what I'm thinking at the moment is a slightly deeper retracement, perhaps somewhere into this area, and then inside there form some sort of raid, some sort of shift, some sort of return into a gap in here, or some sort of entry pattern, and then try to be a participant in a long over there and try to short it and aim for the equal lows down here. So this would be like the Goldilocks scenario for me. Of course, like a short RMR can happen not in this gap, but if it does happen in this gap, that would be something that I'm kind of looking for at the moment. But yeah, pretty close to equal lows. This is the bias still, that's where the liquidity is, so just trying to find out how the market wants to take that liquidity out. Does it just want to grab it now, or does it want to create some sort of pool of liquidity beforehand and then take out the larger lows? Okay, so that's my journal for 18th and 19th. Might post something a bit later.